What a day. The UK's biggest banks are rescued by the British taxpayer. The world's central banks act together to slash interest rates. And yet the International Monetary Fund warns we're facing a major economic downturn. The day began with the bailout, the Prime Minister and the Chancellor making it clear that the financial system is so important to our society that by saving our banks, we're saving ourselves.
For every family in this country, the stability of the banking system matters. So if families are going to have mortgages, if families are going to be able to access cash, if businesses are able to invest, they need a banking system that is sound.
The bank rescue comes in three parts. £50 billion of taxpayers' money will be offered to strengthen banks' balance sheets in return for shares. £200 billion will then be offered to banks in short-term loans by the Bank of England in an effort to get them lending to each other again. Those interbank loans will be underwritten by a further £250 billion of taxpayers' money. And so billions of pounds of public money is moving from government downriver to the city. Now, in normal times, money should flow like water between banks and trickle down to companies and the likes of you and I. But these are not normal times. Banks have stopped lending to each other, confidence is in tatters, and credit is drying up. And that situation is affecting both the economy and the housing market.
So to free up bank lending and reduce dependence on overnight lending, I want to remove one of the key barriers by offering temporary underwriting for any eligible new debt issued by banks. Mr. Speaker, this means that participating banks can start having confidence in each other again because they will know that the government is standing firmly behind them when they want to issue new debt. This guarantee aims to unblock the system so that banks can go about their business of lending to people and businesses. And because it would be priced on commercial terms, taxpayers will be rewarded for the risks they're taking on.
The deal comes with strings attached, and initially it got a cold reception on the markets. Investors don't like the idea of sharing banks with the taxpayer, but then at midday, an unexpected announcement.
And I think the House will want to know that the Governor of the Bank of England has just announced an immediate 0.5% cut in interest rates. He has done so in a coordinated action that is happening round the world, in which the US Fed has cut interest rates by 0.5%, the ECB by 0.5%, the Swiss, the Swedes and other members of the G10 have all cut interest rates, showing that global problems are best dealt with by global action.
The aftershock was felt immediately in the city.
Trying to find out this is unprecedented because it was ahead of the scheduled meeting of the Monetary Policy Committee tomorrow.
Yes, and listen, the reaction here, I mean, it's absolutely instantaneous.
The rally, though, was brief. The markets ended the day well down. A warning from the IMF that the global economy was facing its most dangerous crisis for 70 years and that the UK is likely to slip into a recession hardly helped.
It's been a momentous day and momentous steps have been taken. It's not enough to save the UK economy from going into recession. It may be enough to prevent us going into something more serious. So I think the outlook for the economy is brighter than it would have been if we hadn't had that cut. But I'm afraid it's going to be a very, very difficult year ahead in 2009.
Like banks or loathe them, we need a stable banking system, and let's hope today's action works, because as it stands, there is no plan B. Joel Hill, Sky News.